One, you're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien. Daniel, thanks for joining us today.
Thank you, Shelby.
Daniel, yesterday, seeing a positive day in the markets, and what were we seeing price-wise?
Well, for the day prior to the report that'll come out today at 11, it was interesting in a way to see markets move to the higher side. We saw a decent corn. Again, now but the harvest futures contract for corn and the lead contract at the same time, up 7 cents to 442 and a half, and generally increases of about 6 3/4 to 6 cents all the way through July. Uh, Interesting that while D's 25 is at 424 and a quarter, you got D's 26 for the first new crop contract at 473 and a half. So about 31 cents higher. So that's some measure, I guess, of the degree of uncertainty that the market's at least valuing right now, based on what could happen in for crop uncertainty largely out into 2026. And soybeans also were up actually 12 cents for the November contract. Of course, the November contract is just about off the board. So we're really pricing cash prices, pardon me, at off the January soybean contracts, lead contract. That was up 12 and a half to 1146, so almost to 1150. These are all kind of benchmarks. 450 for corn, you'd hope to be at least as a goal, and 1150 for soybeans. So, and new crop November 26 is at 1121 and a quarter. Interesting that that's lower than the current lead. Well, the November contract's going off the board about 1132. So interesting to watch that. And then for wheat, the D's contract was at 525, basically down 1/4%, pretty much sideways. You did see the March contract at 544, up a quarter. So really, not much in terms of change at all for the wheat hard red winter wheat futures contract. Cash prices looking at where basically you did tend to see with the move higher in the futures, with basis levels generally stayed about the same, and and uh, showed prices for corn now actually the top prices in all these locations that we follow all above $4. And last week when we talked about that, that wasn't the case. We had one or two above that. The top price, one single elevator, the top bid in an area, Garden City area, up to 429. And again, we were struggling to be above four not that long ago. Still a 13 under basis. And when under normal circumstances, we're about even money basis. So you can really see the impact of the harvest, oversupply of local facility storage that's going on there. So again, 429 lead price in Garden City, 417 Pittsburgh, Kansas down southeast corner, northwest corner, about 417. So interesting to see that, and the other prices elsewhere, again, Salina, Topeka, Hutchinson, all 402 to 407. So it's harvest time, and you've got some corn being sold, others being stored, etc. But right now is the time when we're stressing the capacity of storage in these areas, and so you see prices as they are. I would say for grain sorghum, we do see one or two places in the state of amongst these elevators that we're following that have pretty strong bids. The one that stands out most notably would be in Hutchinson. One top bid, one or two top bids of like $3.77 in that area. The next highest bid, 352 in Salina, 342 in Topeka, and then you got 337 Garden City, 327 in Pittsburgh and Colby. So when I see those South Central Kansas locations have some pretty decent bids relative to the rest of the state, then that's a signal that we're probably very likely looking at some elevators that are trying to position themselves to be involved in the export market. And we have heard some news stories of grain sorghum being bought, not in vast quantities yet. Again, the tying with China after with the trade deal just concluded or in the process of being wrapped up between the U.S. and China. So we'll see where that all goes. Soybean bids, interesting. What's interesting is where we have no bids. There are no bids that I could see currently for soybeans around in the Garden City area. Now, as soon as I say that, we'll have 3 elevator calls and say, "Gosh, we've got bids right there." But at least I didn't see them on some of the news wires that I was looking at, newswire databases. Top bid in the state that I could find was in the Topeka area at 1077. 1067 in Pittsburgh. And again, you're not far from soybean processing facilities in both those cases. But then 1057 in Hutchinson, 1062 Salina, and again, weaker out in the west. And then for wheat, in some cases, it seems like if we're taking in so much corn at this point in time, our elevator's anxious to bring in wheat right now. And when we have corn and soybeans, and corn, sorghum, and soybeans on such an inflow at this time. But anyway, the prices that you have, it's interesting that Salina at 486, Hutchinson 481, 486 also, Topeka, and then a little weaker in the other parts. Well, again, 438, 441, 426 between Colby, Garden City, and Pittsburgh. We can't right now. It's a matter of regions and who has grain and where the grain's coming in strong at, and what areas of Kansas are cattle, livestock feeding oriented. Where are the ethanol plants at? And then where if we're going to send exports out of state, where is that? And a lot of that export movement probably, it'll be we look towards Topeka, Salina, Hutchinson, and Wellington, places like that for those type of signals.
And Daniel, these past few times and even now, we've noted that an upcoming report is just about here, as it will come today. And what are some pre-report expectations that you think you'll see in the report?
Well, of course, here we're talking around a little after 10 o'clock. At 11 o'clock, the USDA crop production and WASDE reports will be released. And long anticipated, of course, we had a September 12th report. We skipped the report in October because the government shut down. Well, now the government's open, and we're following through with the November report today. And pre-report expectations are interesting. I guess I'd say before we get into the numbers, there's more than usual possibility, higher than usual possibility of surprises coming out of a report like this. Again, a bit more delayed. We have some pent up uncertainty, and if we get a surprise, say the corn yield number, that would be a big thing. We'd really be surprised at a soybean number. Soybean, look, you talk about soybean yield, soybean production, and the same for corn. And so the key numbers probably to look for would be the U.S. corn yield estimate. So we had a estimate in the September report of 186.7 bushels per acre, leading to 16.8 billion bushels. And very possible, pre-report expectations are that corn yields will be down, sharply, about little over 3 bushels an acre, down to 183.5, a range of 182 to 186. And that production would be closer to 16.5 billion bushels instead of 16.8 for corn. For beans, after looking at dry conditions in the corn belt in the eastern and central part of it, it's interesting that there's not much expectations that soybean yields will be lower. So maybe it's just my western corn belt perspective impacting what I think is happening over there, but I wouldn't be surprised that although the market is expecting 53.3 bushels per acre and about 4.265 billion bushels of production, that there are questions about that, at least from my western viewpoint. And lowest trade estimate for yields 51.7 bushels an acre, 53.8 on the high side. It was 53 even for the for the yield in the September report. So we'll see on that. So out of you put those two together, there's anticipation of tightening for corn, not much at all for soybeans. And of course, those supply numbers, those crop production numbers, lead right into the estimate for U.S. ending stocks. And at this time, we came out of September, we had 2.11 billion bushels for ending stocks for U.S. corn for this 25-26 marketing year. Anticipated, or that was the number that was given. The market expects that to be at about at that or higher. So we shall see. If I want, how is it consistent? I guess how is it consistent between having an expectation of lower production, but then stocks to go higher? Well, you'd have to have some paring back of usage in some way. So we'll be looking at the ethanol usage numbers, the wet corn milling numbers, exports, and livestock feed use to try to reconcile all that. And then for soybeans, we had a USDA number in September of 300 million bushels of ending stocks, and for the 25-26 market year ending August 31st next year. Pre-report trade gas about 292 million bushels, so to be down some. So here you have on the with the yield and production figures unchanged for soybeans, but the ending stocks to be down a little bit. So again, we'll have to see how that reconciles between exports for beans, crush on the other, and see where all things go. So important time coming up. We don't counsel anybody to be too jumpy on situations like this, but all that much more, what'll come out here at the top of the hour will really probably set the tone for direction of markets for the next several months. Again, and weigh heavily into sell now versus store decisions for most ag producers in Kansas.
Daniel, I appreciate you taking the time to join us today.
Thank you very much, Shelby. Take care.
That was K-State grain economist Daniel O'Brien. We're cutting to a short break now, but we'll be right back.